Traders, good morning, good afternoon, good evening. Welcome to the live trading session here as we talk about the non-farm payroll this morning. Trust everyone is doing well as we go ahead and dive into the numbers. Remember, traders, we're not only going to look at the report, what the report was, but we're also going to go take a look and see exactly how the market technically has set up. We spoke about talking about two currency pairs, US dollar CAD as well as the CAD Swiss. See exactly how they set up technically based on the weekly time frame to establish market direction, so that we can go ahead and anticipate where the direction is going to be next week. So it could offer opportunity for traders to go ahead and either get in on those pairs or even start looking to add onto those positions. So traders, without further ado, let's go ahead and get started. See you right after this. Alrighty. Well, welcome back, traders. And as we go ahead and take a look and see what's going on with the market, let's go ahead and address the first thing of the conversation, and that is, of course, what is going on with the news. And as you can see right here, we had the news coming out. Non-farm payroll came out. They were expecting 159K. The numbers came out at 151K. This is worse than expected. And also the revised numbers also came out lower at 125K. Now, and that was revised from 143. If we look at the Canadian data, that came out at the moment right now, 6.6%. They're expecting 6.7%, so that's slightly higher. And that is, of course, looking also at the employment change. That came out at 1,100. They're expecting 19,000. So that is a huge difference to also the revised numbers from the previous, or at least from the previous number. Previous numbers was 76,000. So a lot of change in the employment. Now, we did get a big move to the upside. We saw some Canadian weakness, and we saw some moving out the weakness out of the euro. Let's go ahead and dive into the actual chart and take a look and see exactly what that means for us right here. So there we go. So this is the US dollar CAD right here. And with the numbers, we've seen a little bit of Canadian weakness. This is what's driving the market up here. But also keeping in mind, traders, that we're also seeing some weakness out of the US dollar as well. Now, this is a daily time frame. What you need to watch out for right here, and that's what I'm looking for at this point in time, is this daily fair value gap. You see how the market respect that level? Now, if we're respecting that level, that means that this could act as a support level, and this could be also a temporary rally. We also have broken past this 4-hour fair value gap here. We have traded past that, and the market's shown that it is respecting that level as well. We did close out with a bearish candle, or at least bearish bias yesterday. And so the anticipated move is to the downside. And we want to see price take out the low there at 42.40. Now, I'm going to go down to a 30-minute time frame. And the reason why I'm going to go down to a 30-minute time frame is because I want to look for the opportunity here on the 30-minute. I've got all my levels here, right? I've got my levels that I'm looking for price to go ahead and break below. But what I'd like to look at is what is price action trying to do? Now, we can say that there is a bit of liquidity up here at the top at 143.76. And so the market may want to try and push up to that area. But it looks like we've got more weakness in the US dollar than we are in the Canadian dollar. Hence the reason why we're seeing the US dollar pushing south. And even though we've got a weak Canadian dollar, we're seeing the same thing happening here, is that the dollar's favoring the downside, all right, and pushing the market. Now, let's go ahead and just put a couple of things in here, and I'm going to go ahead and look for a break of structure. So as the market breaks down, creates a high, here we have a break of structure. This is the high, low right here. So this is the highest low. So I'm looking over here, and I'm saying, okay, here we have another break of structure right here. I'm going to go ahead and mark that off. Break of structure. There it is. So traders, already we're seeing that the trend is heading south, right? Here we have another level that we're going to look for right here, and that is, again, a break of structure as well. And that'll be down here. Look for the market break structure right here. That is at 142.40 level. And so right now, what we're going to be looking for here is a market structure change. All right. So could the market take out the high? Well, traders, the problem here is if it takes out the high, we have a change of state of delivery. And so I don't expect the market to go ahead and take our high. I think this 4-hour fair value gap may hold. Now, I'm going to go to the 4-hour as well, and I'm going to look to see if we've got something here on the 4-hour that's going to hold. Let's see here. We got, all right, so if you look over here, we see the market break south, break of structure. It came back down here. It's pulling back over here, but notice what we're trading in right now. This is important right here, traders. You see this? And we've got about 20 minutes left before this. This is a confirmed. But check this out. Here is a 4-hour fair value gap, right? And what is the market doing right now? The market is showing that it's trading inside that 4 value gap right now. So what does this mean for us? Does it mean we just go ahead and sell the market short? No, it means that I'm going to go ahead and look for a lower time frame, look for some sort of market structure change. And it's going to show me that I want to see that price trades to the south side of this 4-hour fair value gap. Now, here is a good example. I've always said, traders, the market moves because of 4 reasons, right? And what are the 4 reasons? Number 1 is create liquidity. Number 2, hunt for liquidity. Number 3, rebalance insufficiency, and then rebalance equilibrium. All right. Now, if we're looking for a trade, I've always said that the best time to enter the market is when price actually breaks, shows manipulation, right? Breaks the previous high low, but shows manipulation. Because remember, traders, the market moves in what? Accumulation, manipulation, distribution. And so if we're going to look for distribution, then always look for the manipulation move. After manipulation, or when you see the manipulation, then anticipate distribution by looking for some change of state of delivery. And so when we talk about that, we talk about crown patterns, in equal highs that create double tops, something like that that's going to create a change of state of delivery, which means we're going to see the market take out the previous low in this case. So now what I'm looking for here is, do I see that? All right. Now, I want to just go ahead and put this up here. It is that 15-minute time frame, but what do you see on this chart? If you look over here, what do we see? We see accumulation, right? All right. If you don't recognize that, let me go ahead and show you right here. This is giving us a very sort of clear indication that price is looking to find resistance outside the manipulation move, right? So take a look over here. This right here is our accumulation, right? Prices move sideways. Now we're looking at manipulation. So where is the market gone to? The market's going to rebalance insufficiency on this 4-hour time frame. So traders, I can do this. I can look for the market to break this trend line, change state of delivery, right? Here is the low right there. So the market so what I'm looking for right here is, do I have something closer here that can be used for a change of state of delivery? Well, I actually do. Right here where I've drawn the line is where we can look for a additional change of state of delivery right here. If I go to the lower time frame, we'll be able to see this exact setup right here. Let me go to the 5-minute. And yeah, you can see it. You see how the market's gone ahead and traded above here? All right. So if I'm going to look to sell, what I'm looking for is price to displace down below this level. So what I'm going to do is I'll mark this off, and this will be where I'm going to look to go ahead and trade. So when we go ahead and break below here, then I know that price is starting to work its way back down south. But until then, traders, I'm not going to do anything. But also remember, if I'm going to look for this to be my market structure shift, right? If I'm looking for this to be my market structure shift here on the 5-minute, then I need the market to actually confirm with an expansion move through that level as well. And that will give me the confirmation that we've now respected this full value gap, or this busy. And again, we've got 20 minutes left on this. Now, I'm going to leave this as we go ahead and pay attention to some other pairs, because I want to go ahead and look at a much larger perspective on the CAD Swiss. I want to give you guys some hints of what I'm looking for on the Canadian Swiss and what that's going to mean for you as we go ahead and trade. Now, listen, traders, everyone knows that this is a sponsored video, and I'd like to go ahead and thank my sponsors, ACAP, for helping us make this happen. All right, traders, if you're looking for a broker, check out ACAP. They're an Australian-based company. They are absolutely great company to work with. We've been working with them for quite a while. And remember, traders, if you go ahead and want to open up a live trading account with them, we're offering a lot of live or at least services absolutely free. And you're probably thinking, well, free, we got to pay it somewhere. Well, what's happening is we're offering our service for free because the broker's covering those costs. Now, I want to make sure that everyone's clear, because I've heard this before. Big dog, you probably got a contract with the broker that if you don't, that if we lose money, you make money. And that is absolutely a lie. And I'm going to confirm that right here live today. All right, absolutely live. We do not have contracts with the broker that we take a profit share from your losses. That is absolutely not what we do here at Trades Network Club. We're a company that helps traders make money, not lose money. And the reason why you can know that and verify that is because I've got my own personal money in the same trades, in the same things that we go ahead and show you and create in the trade signals. So keep that in mind, traders. That because I have real money in, I have my own personal money in, and I'm doing the same trades that we show you, it's impossible for me to want to make you lose, all right? Because I'm doing the same thing. We've been very transparent with all our trades. Everything has been live, open transparency. There's nothing hidden here. So traders, know this, that if you're looking for a broker and you're looking for free services, we're helping you. Now, I don't care if you want to use our broker or not, but I'm just giving you the options. If you want to use our services, sure, go ahead and check it out. But if you want to go ahead and get free services from us, use a broker, because the broker covers that cost. All right. Just want to go ahead and show you or let you know about that. All right. So US dollar CAD breaking up here. And this is good, traders. All right. This shows we got some manipulation here. And again, I believe that this is just going to be manipulation, and we're going to see price coming back down. But I've got to be patient. Traders, you've got to be patient. Now, let me show you an example of being patient. As an example, would you jump out of a plane without a parachute? I'm just asking. Would you jump out of a plane without a parachute? I'm sure you're saying absolutely not. All right. So if you're not going to jump out of a plane without a parachute, then my question to you is, why not? Why not? Because you're going to fall to your death. All right. And so what do we have to do? We have to follow the process. Part of the process when you're in a plane and you want to go ahead and jump out of the plane is put a parachute on. And the same thing applies to trading. Be patient. All right. Don't jump out of this plane before something is set. And the one thing that is set is, number one, we need to have confirmation that the market's doing its change of market structure. If we don't see that market structure shift, then it means that price is trying to hunt for liquidity. All right. Then that means that we're not at the place that it wants to be. And the smart money is trying to push the market to a higher level because it sees liquidity at that level. So keep that in mind. If we don't see the structure forming, it's in most cases that smart money is trying to push it to the next level because that's where the liquidity is sitting. Now, I'm going to come back to this right here. All right. All right. I'm going to come back to this. Avera says here, can we switch on these subtitles? I believe you can do that after the video. I don't believe you can do that during the video. I don't think that's possible. All right. Um, so let's just take a look at a couple of things here, traders. If I'm go, and by the way, I'm going to go to the Canadian Swiss because I did tell you that there's an opportunity here on the CAD Swiss, and I want you guys to hang in there. I want to talk to you about funded accounts. All right, and I want to announce something that's coming very soon in the next. In fact, probably by Sunday, I'm going to be posting something about funded accounts. And this is another example of how we here to help you make money, not lose money. And that is not our game plan to make you lose money, but make money. And I'm going to talk about it when I talk about funded accounts. All right. And I'm going to talk to you exactly how funded accounts can help traders actually grow to substantial income. All right. We'll get that in a minute. Now, let's go to the CAD Swiss right here. All right, here we go. CAD Swiss. Now on the CAD Swiss, if we take a look here on the CAD Swiss, I'm going to go to the daily and the weekly. Let's go to the weekly time frame for now. All right, so here's the weekly time frame. Traders, what do you see here on the weekly? And this is why I'm saying this is a great opportunity for traders that are looking to get in on a long-term trade. We're looking at the weekly time frame, and what do I see? I see the market inside accumulation, but there's something happening. All right. As you take a look over here, we see accumulation forming here, but the market's starting to break out of accumulation. Why would the market do that? You always have to ask that question. Why would the market do that? Because of 4 reasons, right? And one of those reasons could be rebalance of equilibrium. All right. Could be rebalance of equilibrium, and it could also be a stop hunt, right? Hunting for stops. And so, or at least in this case, we call liquidity. All right. Now, where is liquidity? Where is equilibrium? Here is equilibrium sitting over here. All right. That is the equilibrium level of this price action right there. Yeah, we have a low. There is definitely liquidity sitting over here for any buyers in the market. Got a lot of liquidity there. Now, why would the market go down here and then suddenly go back up? Because when it takes out liquidity, there is no more of the sellers in the market. All right. And so what happens is it starts taking out those sell stops. And then what happens is buyers come in and rush into the market, pushing the market back up. So when there's no sellers, but more buyers coming in, this is what drives price back up again. And that's what smart money is trying to do. Smart money is trying to take your money, retail traders' money, and trying to push price in the opposite direction. Now, this is what we've got to look at for the year. We have accumulation, right? So we've got accumulation sitting over here. And with accumulation sitting over here, what are we looking for? We're looking for distribution after manipulation. So if this is going to be manipulation, then what I've got to do is, now that we've gone ahead and tested equilibrium, I've got to look to see if we got a market structure shift here. And if we do, we have a trade. So let me go down to let's go to a 1 hour time frame. Actually, I'm going to go to 4 hour right here. It shows a bit better. All right, here we go. So here's a 4 hour time frame. Now, see how the market's taking out this liquidity here? All right, so there's that equilibrium move. Price goes up. This is the top right here. All right, so this is where we see a little bit of also accumulation. We see manipulation down here. The market goes up, comes down, goes up. We don't take out the highs. It comes back down again. So what it's doing is it's probably coming down for another sweep here. And then when it comes down here, now I've got to look for that market structure shift. And if I get that market structure shift in this area, it's going to be a buy opportunity. Now, before I even get there, traders, I'm going to go ahead and show you something that's so important for us by the end of this week. It is this right here. And it doesn't have to happen with this candle. It could be with a bunch of candles. So which means that we could have this candle close out like this, and then the next candle do something like this. And again, this is weekly. And then the next candle do something like that. All right. And so traders, this is what I'm looking for. I'm looking for price to come back above here. If price goes back above that level, then we're heading all the way back up here to the top. And if this was accumulation and that was manipulation, then this means traders, this is the distribution move that could take us all the way up to 67.20 and 68.30. All right. So this is the distribution. So I'm getting pretty excited about the move that we've seen down here, because this is setting itself up for the distribution move back up north. And so traders, just be careful that you don't get caught up in all of this manipulation right here as price tries to set itself up for the distribution move. So I'm eagerly waiting to see if I can get a good setup here, developing here on the 4-hour time frame, to help me get into some sort of distribution move. Now, what I could be looking for over here is something like, let's see, what about something like this, where price says this, goes up, comes down, all right, goes back up again, drops down, takes out liquidity, and then we see a market structure shift. This is what would be ideal. Now, we've got a lot of trading still today, which means come Monday, Tuesday, Wednesday next week, could be setting up with that market structure shift. And by the end of the week, we should have something confirmed and ready to go. Traders, this is going to be hot. Now, this is not the only currency pair that is setting up with great opportunities. All right, this is not the only currency pair. There are multiple currency pairs setting up that are giving us the same setup. As an example, Euro US dollar. What do we see here on the 4-hour time frame? Traders, check this out. We see price showing a little bit of accumulation. We see manipulation up here, and now we're going to get price distributing back down south. So Euro US dollar could sell off. Hold on a second. What does this mean for us? Well, I'm going to show you here. If you go to, and this is the reason why we close out with profit. By the way, we closed out with profit on this pair, and then we've been holding this pair for a long time. But we closed out this pair finally on this one right here, and we closed out, let's see here. There we go. We closed out this week for over five. We've made over 5,000. Let me just go ahead and refresh the data. Oh, there we go. So we've closed out this week 4,565 pips. This is a third party software. Traders, we had a huge win this week on the Euro US dollar, closing out with 4,600. Oh, so 4,500. The euro loan was about just more than 4,500, but we closed out 4,565 pips this week alone. And the euro was a big reason for that. And so this was a huge win for a long-term hold that we've been holding onto that pair. The next currency pair for us is going to be the US dollar CAD. That's going to be a big one. And then the CAD Swiss is going to be another big win for us as we start building up our positions. So call those our bonus trades. And then all our intraday trades is what we're looking for right here. Currently right now, for those that don't know, we've got a strategy that is just absolutely, and I can say it online because I can, is absolutely kicking ass right now. And that is, of course, our trifactor. Our trifactor is returning anywhere between 3 to 5% monthly. Take a look at our track record since 2023. A consistent return between an average of 5%. In 2024, the same thing, an average return of 5%. And then 2005, you can see 4.17, 3.0. It's been absolutely stellar. All right. Great opportunity for those that are interested. Check out our website. Look for the trifactor. All right. The trifactor. It is great. If you don't know what you're looking for, send us an email at support@tradersnetworkclub.com. and we'll get you guys connected. All right. Now, traders, I wanted to go ahead and talk about this one right here, Euro US dollar. We spoke about this spike right here in the market. Now, I want to show you something here on the large time frame. The reason why we took our profit on the Euro US dollar is because there is a chance that price is going to break through this order block sitting over here. All right. But I want to see a confirmed break, because if it doesn't, and by the end of the week we close out below here, so if we close out, let's say at 760, all right, 1.0760, then that means that the market is going to look to come back to old resistance, and then possibly go ahead and retest and then start breaking north. So I didn't want to be in this pullback, all right, if it's going to do it. So I'm waiting to see if we do break above here. And if we do break above here, traders, then we are on our way towards this level up here, which is 1.1. That's where the euro may very well go to, all right? Now, 938 right here is also a target, and that could be a spike above there after the pullback. I believe we may get a pullback first. The one thing that I am looking for right here on the Euro US dollar is, can price break above the consequent encroachment area? Now, what does that mean? Let me go ahead and make some sense out of that. So if we take the high and the low of this order block, all right, that's about 140 points. So if I go halfway between that, that's 70. All right, so here's 70 right here. Okay, so if I look over here, that price is, what is that at? Let's see here. That's at 835. All right. No, is it 835? Let me see here. 70 pips from the high. So where's the high? High is at, so let's go 70 pips down. So it'll be 46. All right. So 46. So 846. So what I'm going to do here at traders, I'm going to go ahead and mark this off. So 846 is about here. And I'm going to draw a line across. All right. This is, traders, this is important, right? This is a weekly order block. I'm using the weekly time frame for this. I'm going to mark this off as my equilibrium level right here. Of course, it's not going to be hourly. It's going to be my weekly. So I'm going to change this to my weekly here. All right, there it is, weekly. All right, so I've got a weekly, and this is, oh, and I said equilibrium here. Actually, this is not equilibrium, my bad. This should be my consequent encroachment. So let's do, let's see if I've got something here I've put in here. So let's go order block. You know what I'm doing? I'm going to do this. I'm going to do, oh goodness, I'm just going to say order block midpoint or CE. And this is going to be, I'm going to go weekly. There we go. All right, this is important. Now, why is this important, traders? Is because this, if the market, and I wonder if I am halfway. Is that halfway? Doesn't look like it's halfway, is it? Let me see here. Let me see if I did this right. 70 pips. So down there would be 140. Yeah, so that's 70 there. No, that's 60. Okay, I got to go 10 pips below there. So hang on. So it's actually 36 or 30. Yeah, 36. My bad. There it is there. All right, that's the midpoint there. Okay, so the reason why this is important right here, right, is because if the weekly closes above there, then price is chasing after the high up here at 936. If the market does not break above here, then there's a good chance that we're going to start moving back down south. That means the market is respecting this order block right here. So if we get the market to spike up and then come back down, it means it's respecting that order block, and we're going to see price push you back down south. So I'll be expecting the downside move in this. If it closes out above, And traders, then next week, I'll be looking for dips and buying on dips towards this 1.934 and then on its way to this area up here at 112, right? That's the reason why we look for this as well. Also, do we see price taking out the high? Absolutely. Why? Because we see premium up here. Premium is based on the deviation right here. If you look at this movement right here, it showed me that my 1.1 is up here. And so therefore, traders, I'll be looking for price to go all the way up. Let me delete this. All the way up here to this area. This is where the euro is looking to eventually target. So do I believe that price could continue to move back up north? The answer to that is yes. Why? Because if you go to the monthly time frame, check this out. On the monthly time frame, what do we see? We see price in accumulation. Price manipulates here to this weekly fair value gap. Price respects that. And now we're moving into distribution. Distribution is looking for buy side delivery, which is over here at 1.1267. Traders, it's that simple. All right. So yes, do we expect the euro to continue to move north? Absolutely. Do I expect some sort of correction move before it goes up? Absolutely. All right. So which means that there are opportunities for buyers and sellers as the market starts dealing with this right here. Now, I said I was going to talk to you about funded accounts. All right. So, what is the whole objective of funded accounts? As an example, why do traders pay a certain amount for funded accounts? All right. Why would you pay, $100 for $100,000 of funded money? Well, you see, this is the thing. You have to realize that the reason why these funded accounts or funded companies do what they do is because they know that 90% of retail traders lose. All right. And so they know that 90% of the time that these premiums are paid, people are going to lose. And they're banking on that 90%. That's why the brokers are in business too. Brokers are in business because 90% of traders lose money. And so this is the thing right here that you have to understand is that if you have a strategy that is successful and working and you can make profit, the biggest problem with a lot of traders is they try to make a lot of money from a small bit of money. And that's part of greed that kicks in for traders. So if traders are trying to make a lot of money from small bits of money, what tends to happen? All right. Traders tend to blow up their trading accounts because they get overexposed, right? A common thing, a common problem. And so you have to start realizing that, hey, if I want to make a lot of money, then I've got to have a lot of money. So if I'm looking to make $5,000 a month, then shouldn't I have $100,000 in my trading account? Because it's not as let's put it this way. If you've got $20,000 in your trading account and you're trying to make $5,000, that means you're trying to make 25% per month, and that can be really, really hard. And it can put a lot of strain on your trading account. But if I wanted to make $5,000 and I could pay $100 to make $5,000, right? Wouldn't it make sense rather to have 100,000 because it'll be less strain and you've got less chances of blowing up your whole trading account? Absolutely. So this is the reason behind funded accounts. And this is what we'll be doing with our clients is that we're saying, hey, listen here, start off trading one funded account. All right. As an example, all right, Cameron has been trading futures and he's been teaching our traders how to trade futures. And he's showing that he's making about $1,000 per week trading futures. Now, I want you to think about this. If you're making $1,000 per week from $100,000 trading account, you might be thinking, well, big dog, that's not a lot of money from $100,000. But the idea is this. You're paying $100 to trade $100,000. You're making $1,000. So what is your investment return? It's $1,000 on a $100 investment. Think about it again. It's not your own money. It's funded money. So you're paying $100 for $100,000 in the market. That means your return is $1,000 on $100. That's huge. That's 10x. You're making 10x on your money. Now check this out. If you can duplicate that on one and create multiple funded accounts, I believe you can have at least 5 funded accounts. If you open up 5 funded accounts, how much money are you paying? You're paying $500. But how much money are you making? You're making $1,000 per account. So what does that mean? That means you're making 5 times $1,000. That's $5,000 a week. Times that by 4, that's $20,000 per month. How much you paying per month? $100. Now, hold on. My math was a little wrong because I said that you're making $1,000 on a $100 investment. But that $100 is per month. You're making $1,000 per week. Times that by 4, you're making $4,000 per month with a $100 investment. What is that? That's 40x on your investment. You're making 40 times the money that you're investing. Now, all we got to do is take that same formula, right? Take the same formula and open up multiple funded accounts. Now you've got 4 or 5 funded accounts and you're making the same sort of return with the same sort of investment. Traders, we actually have negotiated a deal with a funded company. Now, there is, of course, the future side and there's the Forex side. From the Forex side, we have negotiated for a funded account for our clients. And there's a once-off payment for X amount of money that you want to go ahead and fund. And so what we're going to be doing is we're going to be building out, and I'm going to be posting that on my Discord channel. So if you're not in our Discord channel, all right, make sure you check out our Discord channel. I think in my Telegram channel, I've been posting that on a regular basis. Check out the Telegram channel. I've been posting the free Discord. It's a free Discord channel that you get information. Don't have to pay for it. You're part of the free Discord channel, but we send information. We talk about trades. You get into a community with other traders. Check it out. It's in my Telegram channel. The description should be down below for the Telegram channel. Check it out, the FX Big Dog Trading channel. But what we're going to be doing is I'm going to be posting some stuff in my Telegram. I'll post in my Discord channel as well. But basically what we're going to do is we're going to build a program that's going to be focused on making small profits, all right, from a large account so that we don't put pressure on the large account. And then also at the same time, this can be a consistent return. So again, you're paying once off for a big funded account. And the big and the most important thing is to build small capital, grow small capital, all right? Don't put strain on the account, grow small, but have multiple funded accounts. Now, I believe we can have up to $600,000 in funded money. You can have up to $600,000 in funded money. And if you take $600,000 and now you're looking at a 2% return on $600,000, what does that work out to be? 12,000? And is my math right? I'm gonna have to do a calculation. Yeah, 2%. Bam! I am right. All right. So that's $12,000 rating a 2% return on your funded money. Traders, if you're looking at growing your portfolio, growing your net worth, growing everything, looking to invest in trading, check out my Telegram channel, check out the Discord channel. We'll be posting that in this next week. In fact, as close as I think Sunday or Monday coming this week. All right, traders. So we're going to be paying a little more attention to the euro US dollar. We're going to be paying attention to the US dollar CAD, and we're going to be paying attention to the CAD Swiss. And as soon as we start getting good setups, we're going to set up an opportunity for us to go ahead and add in to current positions. Now, listen here. I'm holding on to me personally, just FYI. For all of those conspiracy theory people around, Big Dog is making money when I lose money. I want to go in and make sure that it's clear. That is absolutely BS. I don't make a cent if you lose money. It is not in my best interest for anyone to lose money. All right. It is not in my best interest. It is always our first priority. Our number one priority, all right, is to make America great again. I'm just kidding, all right? Just kidding, all right? Is to make trading great again, all right? And this in 2025, we've looked at a lot of things that we've seen in the past. Our traders have struggled. And so our objective this year is solely on risk management to help you learn and control your risk management so that you don't blow up your account. We don't want that to happen. We want you to manage your risk, bro. And so I'm actually developed a new system that's going to be able to, listen here, hear me out. I'm going to have developed a new system and I'll be releasing it next week. And the new system is going to be able to allow you to enter the market and know exactly what your risk exposure is going to be based on your lot sizes, based on your entry points, so that you can limit it and say, well, I only want to risk 1%. Well, I only want to risk 2%. And you can limit it. You can still take advantage of the manipulation moves in the market. You can still take advantage of the accumulation moves in the market. But knowing what your risk is going to be, knowing what your estimated risk is going to be is so important. And so coming out in the next few days, well, in fact, let's say in next week, is going to be our brand new system that has a risk management dashboard that you can see for yourself what your risk is going to be. So when you want to go ahead and enter on a trade, buy or sell, doesn't matter. You will know that if things turn around and move against you, what is your total risk going to be? Traders, we're here for you. We're here to help you make money. We're on your side. Listen here, check out our website, tradersnetworkclub.com. Make also certain if you have any questions, go ahead and reach out to us at support@tradersnetworkclub.com, and we absolutely will be here to help you. So with that being said, traders, have a fantastic weekend, and I'll see you guys next time. This is FX Big Dog, signing off.